There is a fear in the market right now that people are bidding up or AI stocks, and they in turn are spending heavily, adding to the euphoria that pushes up AI stocks again. Of course, we saw NVIDIA with its plan to put money into OpenAI, in return for which OpenAI would spend some of that cash on NVIDIA products. Okay, our guest thinks, however, AI expenditures will help push the market higher. We're joined by Tyler Ellegard, portfolio manager at Gradient Investments. Tyler, thanks very much indeed for joining us.
Thanks for having me.
It's a hard one to assess, but you think that this AI spending boom looks intact for now? You think it'll keep rolling?
Yeah, I do. If you look at the companies that are doing the spending, they are cash flow kings. They are the hyperscalers, the tech companies that already have the cloud businesses, and they're rolling in cash, and they have money to spend, and so they're going to spend it where they think the wave of innovation is going, and that's AI. And generative AI where we're at now, that's the base level. What these guys are trying to do, what these companies are trying to do, and what they're trying to spend towards is the next phase of artificial intelligence. And so we've seen OpenAI and ChatGPT is I would say really been the winner of the generative AI front, right? When you think of AI right now, you think of ChatGPT. Mm-hmm. But if you start thinking about who can get to that next phase first, that's who that first mover advantage is going to be, and they are going to be the winners of the next evolution of artificial intelligence. And so they're going to keep spending what they're spending, and they're going to grow it again next year and the year after that, to get to that next phase.
It is fascinating. I mean, right now, AI is basically just a parlor trick compared to the power it'll have in a few years.
Absolutely. I mean, if you think about what we have today is pretty generic. And if you start to think about how that next phase of AI of being just as intelligent as human beings and what that can mean when you start to think of robotics and the various forms that it can take in transportation, I think there's a lot of different avenues that you can go down, but we're in the first couple of innings of this new innovation.
Rate cuts. Are you paying a lot of attention to the Fed, or do you think the market has assumed there'll be rate cuts? Is it baked in?
Yeah, look, I think at this point it is baked in. It's just a question of when do they get to their terminal rate. Do they do another 2 cuts this year and the remainder next year to get to that 3%? Do they put on pause October's cut and then start cutting again? A lot of that is going to be priced in already. But the one thing for that is cutting interest rates does help unlock, or potentially could help unlock the housing market, depending on what that 10-year Treasury ends up doing. And it makes up the housing market makes up a pretty significant portion of U.S. GDP. So if we can unlock that and get those services going and get houses moving, that'll be a good thing overall for the U.S. economy. But what the Fed is doing, I've been in the camp of 3 this year. Whether that happens or not, I don't think it really matters. It's just a matter of when and how quickly we get there.
European defense stocks surging again today. Russia, of course, doing aerial incursions into some NATO countries. Do you have money there, or would you seek exposure to European arms makers?
Yeah, we do. In our U.S.-based portfolios, we have a number of defense stocks. In our international, we favor BAE. It's been a long hold, but obviously Russia, Ukraine back in 2022, it's gone on a lot longer than I think most have expected. Then earlier this year, you had the EU agree upon a significant spending bill. Most of that was going towards defense, which got the initial price wave up for these companies. And then now, you've got Russia doing aerial aerial shows in United Nations, and Poland's come out and said that they will shoot any planes down that crosses their airspace. So defense is going to be an ongoing thing for the European Union. And then also for Europe in general, just internationally investing, we've seen the willingness of the European Union to spend fiscally, which hasn't been a thing for a long, long time. Again, most of that's towards defense right now, but if you can get them to continue to commit to investing in their countries, the businesses in those countries, I think it's going to be a good tailwind for Europe going forward, and maybe we don't see the same underperformance that we've had over the last decade and a half versus the U.S.
You have some stock ideas for us. You touched on housing and interest rates at lows. You think they could be a winner here?
I do. Interest rates always help. If even if it may not affect the benchmark rates that credit cards go off of, or housing or mortgage loans go off of, or auto loans go off of, consumers feel better when they hear about interest rates going down, and potentially could unlock some additional spending that maybe consumers have been pulling back on lately. And you're starting to see that a little bit through the data. You've got the expectation of positive comps for Lowe's, and they had positive comps last quarter. You've got Pro doing well for Lowe's, which is the main driver of their comps right now. And retail customers, retail consumers are still shopping, but if you start to see the housing market unlock a little bit more here, you could see a benefactor as Lowe's.
And also Martin Marietta Materials, big supplier of mixed concrete, asphalt, and other construction materials.
Well, when you think back to 2021, I believe it was around 2021, with the big infrastructure bill here in the U.S., which hasn't fully made its way through the system as a 10-year plan. So you've got Martin Marietta as a backdrop. And then you've got the boom of AI and all the data centers that are being built with concrete and asphalt. And then now you have the trade war, where companies are committing capital to the U.S., which means they're going to have to build out infrastructure to handle the manufacturing and the processing of goods and services that we haven't had to do here in the U.S. for some time, because they want to get around the tariffs. So Martin Marietta being in the cement business, they have a counterpart that we have in our international portfolio, CRH, as well. Those are names that we really like right now, away from the traditional AI tech play.
And we'll just squeeze in one name, possibly with AI implications, Uber Technologies. You like the look of this one?
Yeah, Uber is just like Kleenex, right? It's synonymous with ride sharing. Mid-teens growth for the company. Uber Eats is performing well. And then when you think about automated vehicles going forward and the data that Uber has on transportation, I think it's going to be a good mixture going forward for this tech company.
Thanks very much indeed. Really appreciate it, Tyler.
Thank you.
Tyler Ellegard, portfolio manager at Gradient Investment.